Okay, welcome to another episode of the Scottish Property Podcast. My name's Nick Ponte. I'm joined by my co-host Stephen Clark, and we've got a special guest for today's market update. Stephen, introduce.
Mr. Sam Dyer, my very own business partner. Welcome, Sam. Thanks for joining us.
Yeah, hello everyone.
We got you in to get our downloads up. So I think Sam was one of the most downloaded episodes that we've ever done. So I know you'll promote it, Sam. So that's one of the reasons we got you in here.
And he's very opinionated.
Brilliant. So today's all about the market.
If anybody wants a background story on Sam, look back our backlog catalogues and listen to his episode. We had them on talking about raising private finance and building a portfolio with none of your own money. Back in what episode was it, Sam? About a year and a half, 2 years ago?
March 2021, I think.
See?
Yeah.
Not too old. Not too old.
Tax return deadline today, guys. Have you all sorted out?
Prepared long in advance. Sam puts me in shape.
I put mine in the May, June. So getting the return in, I think you get the return in ASAP, know your numbers, but I don't pay them a penny of tax unless I have to, obviously, with the payment on account. But they don't get their payments till about 3 or 4 days before the deadline. I think that's a common misconception that people think, oh, I filed the return, I have to pay the tax. No, you didn't. No, you didn't. So I get your return in. I'm not saying pay your tax quickly, but get your return in. Because yes, Stephen was a nightmare in the early days. I'm going to kick his arse. I'm like, we can't proceed with this mortgage because you've not got last year's tax stuff in. Get it done. So, he's a good boy now, aren't you, Stephen?
That's why you picked him as a business partner. Okay, so kicking off the news stories for this month, we've got a wee article on house prices here. So this is obviously the final quarter of 2022 data coming through now. So we've got an article here that says home buyer demand plummeted 50% at the end of 2022, says Zoopla, whilst buyers sought out flats and smaller homes to keep mortgage costs down. So Zoopla have come out with their data, and they're saying that house prices grew by 6.5% over the 2022, following stagnant final months. So buyer demand in January down 23% on the 5-year average. And basically what this is all about is, the final months of the year when we had the mini budget announcements, all that chaos with Liz Truss and all the rest of it. And then that spike in mortgage interest rates, it really took its toll on the housing market, and buyer demand shot right down. So it's saying that demand for properties plummeted 50% from October to the end of December. So do we think that this is going to be a continuing trend downwards for 2023, guys? I'll start off with Sam Dyer. How do you think this is going to pan out leading into this year?
It's an interesting one. I think buyer demand certainly dropped, but there's still a lack of stock on the market. So certainly what a lot of surveyors and estate agents that I've been speaking to are saying is they think things are just going to stagnate. Properties are typically selling around home report now rather than crazy over. I mean, good stuff will still sell, but I'm definitely seeing a slowdown, and I'm definitely seeing a lot more deals creeping into the market. I mean, decent houses with discount generally led by a motivated seller. So we're starting to see that sort of market creep back in. Overall, though, the overall figures, I'm not expecting any massive drops, but again, I don't have a crystal ball.
Stephen, what do you think? Do you think we're going to go into negative house price growth into 2023? How do you think we're going to end the year?
I just think the last quarter of 2022 with the mini budget, the interest rates, the base rate going up fucking almost 3% in the last quarter, just gave it kind of market uncertainty. People were a bit coy. Like, I noticed that selling my own house at the time, spoke about in the last market update. I just think that it cooled completely off. Everyone just put the brakes on it, but now I think confidence is now going back in the market. People are now moving. But I had said this to Sam a few weeks ago. It's something that I kind of quite believe in quite a lot, and I think you touched on it in that article, that the smaller properties and flats will start to sell. Now, typically in the areas we've been investing in for the last 3-4 years for the portfolio, it's typically been the flats that only investors seem to buy. So you're competing against other investors, or you're driving the price down, whereas not a lot of owner occupiers want these type of properties. And I think because I suppose we were spoiled with historically low lending for the last 9-10 years, that when people start out in the property ladder, they're checking their affordability and what they can afford and going, well, I'm only paying 1.6, 1.7% of their mortgage. I can afford a 250, 300 grand house for a first house. So I think that's gone now. And I think what's going to do is force the people that are trying to get on the ladder back into, let's start small, like we all did. And you start off with a small flat, a 1 or 2 bedroom flat, and you're kind of working your way up. So I think this will actually promote the lower end of the market and drive that back up.
That's interesting because it's quite a different story to what we saw, during the pandemic, where we saw this race for space and people, buying these, rural bigger properties. Now it's kind of gone the other way. So I think, bear in mind, these articles that we see in the press and all that, these are taken into account, general averages across the whole of the UK as well. So each individual geographical location is going to have its own kind of little micro market, and kind of differences there, especially with Scotland. It's going to be quite different to what you read sometimes about what's happening in London and stuff like that. So, but it's good to talk about the general activity in the market.
Sam? And even micro on that as well. You'll micro that down into the Scottish areas as well, into different cities and different regions as well. In Scotland, it'll behave differently from other areas. So it is unique to kind of, I suppose it's so important to know your own area and what's happening in your own area with the house prices and property types that are selling and not selling.
So do we still think that do any of you still think that the 18-year property cycle is going to play out? Fred Harrison thinks that property prices are going to crash in 2026.
It's still quite plausible. It's all unfolding, but I don't want to call it. I know what he said. He's been on quite a few podcasts over the years, and he always says, all these economists say something, 90% of the time they're wrong, but when they're right, they shout about it like no tomorrow. So I don't want to call it and say they'd be wrong, but it seems to be unfolding in the manner that he's obviously predicted. Might not quite take 18 years, could be a little bit longer, but something's got to give at some point. But just what Stephen was saying about the smaller flats, I totally agree 100%. And I think, typically a lot of investors starting out flipping houses, they would flip houses. But I think, little small 1-bedroom flats, total kitted out like an absolute bachelor pad, that's going to be a flipping strategy in the not too distant future, because you might be able to pick up these flats quite cheap and have a market who's going, oh wow, I can get this flat for 90 grand, 100 grand. I can't afford my 250 grand new build anymore. So that there's going to be a widened pool of people, because the government still wants people to own homes. They're pushing everybody to own homes. They can't afford the 2 or 3 bed houses. They're going to be looking at the 1 and 2 bed flats. So I think it's only logical that the demand might increase for these.
And possibly downsizers as well. So people later on in life, and they're cashing in on their equity, possible cash buyers as well, just saying, right, we'll just get a 2-bedroom flat now, and something that's really nicely just all done up, ready to move into.
It's interesting you mentioned the 18-year property cycle, because everything would point to the crash happening sooner. Like what we've just went through with the pandemic, the war in Ukraine, the rise in energy cost, the cost of living crisis kind of biting in. But unemployment still at it's all-time low. We've still got a lot of money in the economy. The banks are still lending. So really, and like Sam was saying, the demand's not there, or the supply is not there to reach the demand. So really, it'll probably just level out, I think, going into 2023 or the first quarter of 2023, rather than any kind of continuing drop, I would have thought.
Fuck it. I'll still put a prediction out there for a 10% drop. There you go. 10% drop by the end of 2023. So I think we started like 2022. It looked like it was like up 10, 11% or something like that. And so we've ended on Zooplas figures at 6.5. So I can see that continuing to drop into negative. So anyway, moving on from house.
Nick, just one thing I want to leave you with though. Do you a house prices going to fall 10%, or a house value is going to fall 10%? The two very different things.
So it'll be prices, what people are actually paying. So values will be valued because surveyors and all that are still going to be going out and doing valuations based on the crazy figures that we saw, you know, a year, 6 months ago, you know, so that'll take a long time to filter through. So there's going to be a lag effect here, you know, and I think even the kind of the impact of the mortgage interest rate jumps as well, that's going to have a lag effect as well. And we're going to see this coming out in 2023 when people are going to start ending on their fixed rate term mortgages and all that. So I think it's like, I don't know, 1 million people over the UK are ending their fixed terms, which are going to jump their mortgage costs up. So that'll take a while to filter through. But like you say, Sam, like right at the start about the shortage of stock, you know, there always seems to be this shortage, which might just kind of level things out, you know. So it'll be interesting. Going into rents, guys. So obviously, you know, we talk about it's a bad time to be a landlord, getting hammered left, right, and centre from the government. But you know, ultimately, the good thing is rents just good thing from our point of view. Probably not good in the kind of grand scheme of things because it puts us really in the spotlight. Rents are still going up, and they're going up by quite a significant amount. So, latest data released by Rightmove, and this is for the quarter 4, so tail end of 2022. Now, I like the Rightmove data because they have a lot of data that they can go on. The only trouble is they don't put it into regions for Scotland. They just bulk us up into one region and just put Scotland. So if they give you a little map of all the areas in the UK and they give you the rental price increases, so looking at the kind of headline figures, and now this is for the whole of the UK. Average property asking rent £1,172 per month. That doesn't really mean anything, to be honest with you. Annual change over the whole of the UK, 9.7% over the 12 months. But if you look at it and break it down, what is interesting is Scotland is second position, highest rent increases below London. So London's 15.7% over the year. Scotland's 13.6% increase over the year. And then you've got like places like the Northwest, Manchester, you know, Wales and all that come under Scotland by quite a bit, actually. So is this the impact that we're starting to see now of the Scottish government putting in these, you know, in these rent controls and these rent caps? You know, Rightmove data is taking the properties that are coming on newly to the rental market. So is this causing landlords to really jump up their prices, causing the increase in rents? Sam, have you seen any kind of correlation there at all in terms of the data?
I don't think it. Yeah, I think it's not just what's happened in 2022. It's the last few years. Obviously, the data and trend lags, but Scotland's also gone from a slower. What's the point where I'm not for? It started further back in terms of the real figure. So even if you look at that table, virtually every single one is £1,000 a month, bar the Northeast, and then Yorkshire and Humber at 922, and then obviously Scotland. So it's still, even though it's had the biggest growth, it's still one of the lowest average prices. So it's gone from a further back starting position. So in terms of percentage increases, it might be the most, but in real terms, is it the most? So that's one thing I just want to point out. But I do think that the rental market in Scotland is going absolutely wild. There are stories about, you know, flats that would let in, say, the year 2000, and it'd be the same rent right the way through for 15 years, say it's 450, still getting 450, still kind of worth that. Then suddenly, the last sort of 3 or 4 years, this suddenly rocketed to 600. So there really is, I think there's a lot of meddling. It's not just the things that have happened very recently, it's a whole accumulation of things. Fundamentally, the government's gone, landlords are making too much money, we're going to raid that sector, raid some money. A lot of what I think's happening is your sort of amateur investor, your Mr. and Mrs. Average with 1 or 2 properties in their personal name that was buying on the side. They're starting to go, oh, nah, had enough of this, too much hassle. But the way the government sort of laying the rules out, they're paving the way for big corporations to take their place. And I think that's kind of where the government want us to go. They want to eradicate ordinary property investors, or whatever you want to call them, and they want big corporations in their place. And if you think about it, let's just think about let's just flip the coin and look at it from a tenant's point of view and from the government's point of view. So from the government's point of view, if you've got lots and lots of little landlords all doing their own thing, different level of service, you've got all these different self-managing landlords who maybe don't quite have the systems that an agent has. You know, when they go on holiday, they're maybe not quite getting the repair done in a timely manner, that exchanging messages, you know, through text messages, that sort of thing. Then let's take, you've got lots of different letting agents. Every letting agent's got their own style of management systems. Then within that letting agent, the different landlords have their different wants, needs, styles. Some are tight with repairs, some are lax. You know, they're all over the place, right? So from a service delivery point of view, it's fragmented. If we were to eradicate all these little people and have one landlord come in with 10,000 properties, it's going to be systemized, it's going to be procedural, it's going to run a certain way. So from a tenant's point of view, it's a lot more continuity. And from the government's point of view, it's easier to regulate, a lot easier to regulate. Got big corporations, filing accounts. So I think that's the direction to travel. I think it's going to take a couple of decades to fully get there. So my first point is, if you're getting into property investment, your buy to let now is go big or go home. If you want any less than 10, don't even bother. It's not worth it. So that's the first thing. But the second thing is, this actually excites me when I think about it. Because right now, you know, we've got the Scottish government coming in. The only real voice we have is SAL, the Scottish Association of Landlords. We don't have any big corporations on our side. So if big corporations come into the sector, what's going to happen? They're going to start lobbying government. They're going to start bringing the pendulum slightly back in line, you know, in order to provide the homes. And let's be honest, I think the bad landlord mantra might slowly fade away if we have big corporations providing the homes. Because think about it, right? You know, like, does everybody hate Tesco, who provides food? It's a big corporation. It's not someone ripping us off kind of. That's maybe not the best example, but I think I'm talking like 2, 3, 4 decades away. I think that's the direction of travel. It's going to take a while, but the government don't want small landlords. Section 24, I actually agree with it in many ways. You know, that they're trying to get you off owning properties personally and do it seriously. They want you in a company. And let's face it, right? Any serious business is incorporated.
Yeah, 100% agree with you. Stephen Clark, 13.6% increase over the year. Surely that's unsustainable. You know,
yeah, but I mean, that just stands really in line with inflation this year. So is it the big shock factor when everything's went up 13% and this is just part of the parcel of the services you provide or that people pay for? So yeah, I don't think it's a huge shock. I do kind of agree with what you're saying, Nick, though. I think that when have you ever seen Scotland comparing to London in terms of growth or percentage growth? So I think that maybe the data might take a while to lag through, but I think that'll increase again, the same again this year, if not more. But and that'll be because of the Scottish government's meddling in the industry and rent cap and rent freezing. That when we do get the tenant changeovers, we can bump the rent up that bit higher to compete with the demand, but also maximise the revenue, which, like you've touched on before, Nick, on the podcast, I think that does pave for a bit of a dangerous path.
But this is where it starts getting scary, and this is interesting because if this continues again this year and we go up another 13, 14% or whatever, already we're seeing data that, sometimes rent is at 40% of, tenants' income. If it goes up to 50%, that's bad news. I don't think that's healthy. It puts us right in the spotlight again.
But is this not going to be the same for most people that own a mortgage and they're paying 1.6% on their fixed rate for the last few years? They come up to the end of this year, they get their new terms now 5%. Does their mortgage not go up a few hundred quid and then become 40% of their income as well?
Yeah, but can you imagine having your income, and looking at your income, your monthly income, and be like 50% of that is going out on rent? It's just unsustainable. So Sam?
This is the point, Nick. I think rents are getting pegged back slightly. There's certain areas where they're not really they're racing up. So one example is Cumbernauld. We've got quite a lot of properties under management at Cumbernauld, and there's a couple of areas, some of the not as what's the word, not as affluent areas, like the sort of lesser areas. We're getting houses that should be getting like 750 rent, but what we're getting is absolutely bombarded of applicants, but none of them really meet affordability. They've got issues. There's loads of problems. So we're getting more desperate tenants because there's a shortage. The prices have rocketed up, but they can't really afford them. So we're getting tons of demand, but no one really suitable. And an area like Cumbernauld, which is predominantly ex-local authority housing, you're going to have probably a higher concentration of low and ordinary income families than you are, say, in the West End of Glasgow, where people can afford to pay £2,000 a month for whatever it is they're paying for their flat. So in these areas where your 550 rent's gone up to 750, the housing benefit rate's not kept pace. We're seeing insane demand, but we're seeing it's taken a while to let them because not because of lack of demand, but because of lack of quality applicants. So I do think rents rising so quickly can be dangerous. And the government's obviously put, you can't say no DSS, you can't do this, you can't take fees, for referencing and all the rest of it. So the landlord stroke agent's got all this cost, but they can't say no to an applicant. They're getting the time wasted by people that clearly can't afford properties. And so it's just creating a real issue. So what do? Do you put the rents lower? But that's not going to solve the problem. So it is a problem in itself. So yes, the rents are rocketing up, but is that a good thing? Well, it is. And again, exactly as you said earlier on, that's the data for Scotland as a whole. It needs to be area specific. And even within an area, like we could just take Dunfermline. Some areas are different to others. So this is really where local knowledge really is really, really important.
Like you say, though, there's going to be a ceiling price, isn't there, on certain areas? Like, if you're dealing with predominantly tenants on benefits and that's your target up market, landlords have got to be realistic. Agents have got to be realistic. They can't just say, oh, well, rents have gone up 13%, but, like you say, their benefits haven't gone up. So where's the money coming from? So you need to be realistic. Some of these areas are going to have, a ceiling price. I think that's probably enough on rents, guys. Moving on to our next story. So this is so obviously we as landlords, we got hit with the 0% rent increase cap by the Scottish government back. I think it was Nicola Sturgeon announced it. This kind of emergency cost of living bill that they rushed through Parliament and then basically said to landlords, up until March the 31st, you cannot increase your rents and there's an eviction ban. So everybody was like waiting to see what was going to play out here. And it looked like they were going to extend the 0% cap further for a while there. And then all of a sudden they did a kind of U-turn and they said that now you'll be allowed 3% and possibly up to 6% if you can prove that, your costs have gone up, or that you basically financially you need to increase it by that much to meet your costs. I think first of all, Sam, why do you think, is there something to do with the social landlords, isn't there, that they were going to allow them a much bigger increase, and then that's why they had to sort of go back to look at private landlords and say, right, we'll need to allow them something? Do you think there was something at play there, that they did a U-turn there?
Yeah, I think it's getting backfiring, put it bluntly. So regardless of what we all think about the actual politics, that's one thing. But the way that they implemented it was very incompetent. So they rushed through the legislation without any thought. They didn't consult key industry stakeholders, which in any industry, when you're going to change something, they consult the stakeholders, do a bit of back and forth. Like when the PRT came out, they didn't just go boom. There was a bit of back and forth. They wanted to do this. Then the stakeholders like Sal came in and said, well, what about this? This is it. This is the consequence of doing this. Okay, yeah, tweaked it a bit. And then the final product was a lot better than what had initially been anticipated by basically quite a left-wing government in the Scottish government. So with this rent freeze thing, they rushed it out. They thought, yeah, it's a stunt. We're going to win votes. We're going to be champions. We kind of just need to do a blanket, protect everyone that's social and private. And I think this is where the first mistake the Scottish government made was, I think in their head, they think the social sector and the private sector are different. There's a holy grail on the social sector, but the private sector is all mean. At the end of the day, we're all housing providers, and it's all the same end user tenant, and it's the same laws, it's the same leases. That's the first mistake they made. So obviously they've rushed this rent freeze through. They're then getting big, all these big social landlords and investors announcing publicly, we're not going to invest. We've got no certainty. We need to increase our rents to cover our costs for repairs and maintenance. In April every year, we put the rents up. So the Scottish government's like, shit. And there was an article I just seen this morning saying in Glasgow, the social housing waiting list has rocketed to 60,000 people, and it's like 10 people per house let in the previous year or something. It's absolutely rocketing. So obviously we all know that there's a shortage of social housing. I think the Scottish government are thinking, shit, they're not building social houses. They're threatening this, that, and the next thing. We need to keep them happy. So what they then do is go, okay, we'll consult with you, which is what you should have done originally. They'll consult with you. So then they're obviously announcing, oh yeah, well, social landlords have said they're not, on average, they're only going to put the rent up 6% on average. We think that's okay, so we're going to allow it. Put that out. At the same time, completely irresponsible. Yeah, but private landlords, 0%.
Yeah, that was it.
Red rag to a fucking bull. Sorry, excuse my French, but just a bit that point was red rag to a bull. So, okay, we're in this position now where, Sal in the background have been seeking legal advice over can you put a rent cap in, and they've obviously found it breaches various laws and bits and pieces, but most importantly, the European Convention of Human Rights. And obviously there's you can go look that up. There's loads of good information on that. SAL, Scottish Association of Landlords, have got some really good content out there, keeping you all bang up to date with what's going on. And so they've launched this legal challenge. They've taken the Scottish government to court, and they announced this pretty much straight off the back of the Scottish government announcing the 0% cap. So then very quickly, flat bash rush, oh crap, will allow you to raise your rents 3% or 6% in exceptional circumstances. Now, this is really, really critical. You might think, oh, 3%, whatever, but I hope this is really, really important, actually. So they've completely created a mess here, but they're sending a message that, well, social landlords, it's okay to put your rent up 6%, but private landlords 3%, and there's a difference here. So what's so special about social landlords? But on this 3% thing, what I think is going to happen, and I've been speaking with a few agents, the new norm, we're probably going to move. And so previously, let's just take an example. There's a house that I have in my portfolio let out for $650 in 2018. 3 years, not a single rent increase. The rent's up at should be about $750 now, and I thought, right, I'll stick it up to $675, £25 increase, so $650 to $675 in 3 years, and it's still at $675 another year later, and probably do have another rent increase. But anyway, with the new regime, what I think is going to happen is we're going to automatically put our rents up 3% every year, regardless. And if 3% is not a lot, but if it becomes the norm, it'll be expected. Then let's take that example again. 650, add on 3%, add on 3%, add on 3%. At year 3, you're at 710. It's okay, the market rent's 750, but 710 is better than 675. So first of all, I think we're going to be better off. But I do think this is what's going to happen. We're going to move a tenant in. We're going to automatically put reminders in our system to serve a 3% increase at year 1, and so on and so on and so on. And obviously, we need to give 3 months' notice. There's nothing to stop us giving a year's notice right at the very start. But if enough landlords and agents start doing this, I do think it's going to become the norm, because it's not abnormal in a commercial lease. You move in, your rent's going to get reviewed at X and Y and this, that, and the next thing. But we might even say, okay, we're going to put the rents up by 2.5% every year. That's not bad. So long term, I think we could be better off.
Stephen,
this is what's so ironic about the whole thing.
Stephen, does this ultimately have, negative consequences for the people that they're actually trying to help, i.e. the tenant? This is what's messed up about this whole thing. They're trying to take the limelight and say, oh, we're helping you out. Ultimately, it's backfiring.
It's completely backfiring. Like Kenny Sam touched on there, I'm probably one of the worst for doing that. If you've got a tenant in there that's in long term, 6, 7, 8 years, I don't increase the rent. So by the time they go to move out, you're flipping, a few £100 below market value rent. You put it up, and you're like, oh shit, I should have been getting that the whole time. But didn't give any issues. They were a really good tenant. You took care of your tenant, and you provided them. They looked after the property. Why rock that boat? Now, because the power's getting taken away from us, it's making us, or it's certainly now making me, sit up right and make sure my rents are continually up to market value whenever I can. And we've got an example that had a property that I gave to Sam's agency 4 months back. The tenant was in it for 7 years, paying £800 a month. Sam got £1,400 a month at the new market value rent. That's a huge increase, but I hadn't put up a single increase in 7 years because the tenant was good. They looked after the property, everything was fine. Now it's right on top of my forefront because of what's happening to the industry by the Scottish government. I'm like, right, I want my rents to be at market value all the time. But
I think you want to trail the market value. You don't have to be at it, but we
depends on the product you provide and obviously supply and demand in that area as well.
There's a block of 8 flats that me and Stephen own in Aberdeen, and 3 of them we've refurbed and relet. The other 5 are on the original tenants, and after we'd owned them about 6 months, so the low rents and all the rest of it, said, right, I want to put all the rents up. And Stephen's like, oh no, what's the point? Oh yeah, 25 quid. And I said, Stephen, it's not about that. It's about setting a precedent. Setting a precedent. Okay, £10 nothing. And then next year you can do it another small amount, or we just leave it. We have a massive shortfall, and you can't hike it up in a one-up. If you do small little ones, that's not immoral. That's not wrong. It's actually controlled. You're not ripping them off the market rent. So the market rent's here, you're here, and you're sort of just slowly following it. So you're still giving them a good deal.
But it's clever business when you think about it as well. Like if you are set to a 3% rise and we're now forced to the 3% rise, it just makes it kind of makes you project your costs, your income, all through your business. Like Sam was touching on before, it's making it very corporate, very business-like, where we're not just being landlords, we're just being.
What's going to be interesting? What's going to be interesting is, like, how do you get to the 6%, and what do you need to do to get that 6%? Because I can show you 3 of my mortgage fixed rates are coming to an end. They're going to jump up significantly. We'll need to. Do you know anything about that process yet, Sam, or is that still...
Apparently, the information that's come from Sal is saying you have to basically submit it to a tribunal, and there's a whole process to go through. And
yeah,
I've read it's pretty long-winded. You think, why would you bother? Just take the 3%.
Yeah.
But what about this? The option is there.
What about this, right? Obviously, you can only increase the rent on a PRT once every 12 months, right? So say you take that 3%, and obviously that won't kick in until you would give notice in April. That won't kick in until July. So then you're fixed in for that for a further 12 months. What happens if they end all this bill in, I think it's 6 months, they put this 3% on. So in September, potentially, you could be... This might have all ended, and landlords may well...
really ended though.
Does anyone see an end to this?
No,
will it ever go back to normal?
That thought did cross my mind, but I thought, you know what, the increase now is better than a what if.
Exactly. I don't actually ever see it going back to normal. I think that they had that long-term strategy when they released the paper. What was it called again? The tenants, well, what was it? The Green Party had a lot to do with it. The government paper that they put out to say long term they're gonna implement stronger rent controls.
Are they though? What does that mean? What does that even mean?
Well, they don't know. That's why they're buying time with these 3% caps.
But I think the whole Green Party's manifesto is founded on loony views. So it might well be, oh well, we'll cap it at 3%. I think that 3% might even be the rent cap. Yeah. And this is the irony of it. If we're allowed to put our rents up 3% every year, that's not a bad thing. That's actually probably a good thing if it's
Well, when inflation's 10%, come on,
it's not going to be 10% forever, though, is it?
No.
And
anyway,
moving on.
I've got tenant changeovers as well that we can get the rent back up like a chunk if the market value has been shooting up with high inflation.
However, there is one issue with that. In Dublin, they introduced rent controls, but only in the city centre. And when you come up for relet, the new price is based on what you were charging before.
Right.
So it's restricted based on what you were charging before, and it's absolutely destroyed the rental market there. And I think that I don't know if they're reversing it or talking about reversing it. So they might do that. How they're going to figure that out, I don't know. But one thing's for certain, the government's played their hand that they can just do this. Well, maybe they can't actually, because Sal's obviously challenging them legally, and it could get thrown out completely, could get parts of it thrown out. They've shown their hand. So now you need to protect your business. You need to automatically put your rents up. And I cannot stress that enough to all the listeners. It needs to be the new norm. Automatic 3% increases, just automatically. I don't think that's unfair. I think that's reasonable. I mean, you don't have to. If you feel, the market rent's here and I'm getting very close, do you know what? I'm not going to put the rent up. But an automatic 3% increase, if it makes sense, I think that's what the new norm is.
Do you not think, like, when Nick touched on there as well about the, like, will this be 6 months or will this just be the new norm and roll on? I think with a lot of these things, and because I've done it so slapdash and I've not really thought the policy through, they're trying to push the boundaries to see how much we react. If we take legal action or anything moves forward, then they'll just be like, oh well, no, we did that and they didn't do nothing about it, so fuck it, we'll just keep continuing with that.
Yeah, absolutely.
And there has been talk of legal action, hasn't there, Nick?
Yeah, so just Sam's pretty much explained all the detail that we know on it, but Scottish Association of Landlords, who I recommend, I think they're brilliant. They've just provided me a lot of support over the years. And Scottish Land and Estates and Property Mark are the groups that have got together to basically take this to what is it called?
It's the High Court.
The High Court. Right, okay.
High Court session, I think they call it.
Yeah, right, okay. So basically they're arguing that the law breaches the European Convention of Human Rights by discriminating against private landlords. So they took this petition basically from private landlords, and we'll see where it goes. We don't really know, like you say, it could get thrown out, but at least they're doing something.
But I think that announcement's what sparked him to go back on his 0% cap to a 3% cap, because he's realised he's made a mistake. Talking about Patrick Harvey here, he's made a mistake. Yeah. So this is the thing, they're not listening. They're just blasting on with their political ideology, no matter what, and then going, oh crap, we've now got a problem. How do we patch that? There's going to be holes in it. But at the end of the day, there is a balancing act. I think most landlords and letting agents get the balancing act right. They look after tenants, they charge a fair rent. The government seems to think that the Scottish government seems to think that we're all bad, and they're bringing out this legislation, and all it's making us do is tighten up our businesses a little bit and think, you know what, we need to run this a bit smarter.
Yeah. Well, while we're on that note of the government, we actually got a rejection from the Patrick Harvey's office to say that he wouldn't be prepared to come on the Scottish Property Podcast. What was some bullshit excuse due to prior commitments or something like that? Like, he's not a Prime Minister. Come on, he's like a MSP. Do you know what I mean? Come on.
If he's got prior commitments, you just write back and say, well, when would he next be available? Can we book him in?
Well, I think we gave him the option.
How would he take that?
That was the response, yeah. Whenever suits you, we will be available. We also tried to get Ross Greeran, and we got a reject from him as well.
Oh, no doubt. There is one other thing, though. See, about rent rises, I think it's quite important. Buying and selling tenanted properties. Obviously, if you're not allowed to evict your tenants, if you're not allowed to do all these things, but you need to sell, well, selling tenanted is a pretty viable solution. But if your rent is way low, and obviously the value of your house is going up, your yield becomes really, really low. And I've heard it before. Oh, it's a long-term tenant. They do this, they do that. It's fantastic. It's fantabadozy. The buyer does not care. The buyer's looking at, well, what's the numbers? Can I get a mortgage based on that rent? Is it going to pass a stress test? So you actually, by not putting your rents up even a little bit, you're shooting yourself in the foot, not only for your future mortgage prospects, but also for your potential exit. So it's actually, I think, as a business owner, it's an irresponsible business move if you don't keep your rents at a reasonable level. I'm not saying charge a market rent. Charging under market rent is absolutely fine. It's just ensuring that the gap doesn't get
Thing
out
is,
of hand.
that's a really good point actually to kind of end on as well. Talk about mortgage rates, because if you're a landlord and you've got your fixed term coming to an end this year, and you have been one that's just kept your rents historically kind of low and not really bumped them up the market value, you might struggle to get a remortgage if your fixed period's coming to an end this year, because the stress test, is currently sitting about 7 or 7.5%. If your rent doesn't meet that stress test, they might not even give you a mortgage.
Yeah,
I
good
think it's
point.
also coming beautifully back to your lower value properties where higher yields are going to be easier to get mortgages on. Well, when I say lower, not too low, because when you go below 75 grand, most limited company buy-to-let lenders don't want to lend. But there's going to be, when I say low, 75 to, I don't know, 75 to 105, let's call that. You're going to have higher yields than, say, your 200, 300 grand flats in West End, Glasgow, and Edinburgh.
Mm-hmm.
They're going to be very, very difficult to make them work anymore.
Yeah.
Okay, guys, time's marching on. So let's end on a high. Let's end on a positive here. So I've found an article here to say that the Mortgage Works, which is one of the biggest buy-to-let lenders, cuts buy-to-let rates. So, things were looking pretty scary for a while there. 6% was probably the kind of norm for 6.5, some 7% rates for buy-to-let company mortgages. So this article says specialist buy-to-let lender, the Mortgage Works, has reduced rates on selected products across its new business range by up to 50 basis points from January the 26th. Selected 2, 5 and 10-year fixed rate buy-to-let products were reduced by up to 0.3%, while large portfolio buy-to-let across 2 and 5-year rates were slashed by up to 0.5%. Limited companies and houses and multiple occupation, there were reductions of up to 0.2% across 2 and 5-year fixed rate products. So it's quite small, but it's a good sign. And during a time where we are facing the Bank of England base rate keep on rising, potentially this week going up to 4%, some expect. So what do you think's going on here, Sam? Do you think this is hopefully going to be...
Well, yeah, I mean, mortgage rates, we were fixing mortgages just under 3%. So my knowledge is limited company. If you start talking about personal name buy-to-let, I'm a bit out of tune. So under 3%, limited company, you're fixing your mortgages. They rocketed up to, 7, 8, 9%, by sort of September time, I suppose, last year. But the base rate was still down at 2 point something. So what the lenders did was, where do they think the base rate's going to peak? And we'll price our products accordingly. So the thought process was it's going to peak at 5.5%. Then after Rishi Sunak became Prime Minister, they sort of dropped it a bit. Well, it's maybe 4.5%, 5%. That's where you think it's going to peak. And so now, so obviously the price then for this hike, okay, that's where the base rate's going to be. Now we're seeing the economy unfold. We're seeing some stability. The base rate rises from they were going up at 0.75 in one shoot at one sitting at one point. Now going up by 0.5. So how the bank increase, if it's going down the path that's been predicted, the mortgage lenders are like, yeah, that's fine. And so as events are unfolding as is predicted, so the mortgage lenders are now going, okay, we can now start reducing the rates. But the reason they're reducing the rates is because lenders have loads and loads of money. They cannot make money if they don't lend the money out. Now, we've got a dwindling pool of buyers, both owner-occupier and, I suppose, a lot of investors are sitting on the fence. A lot of my clients in Dyer & Co, particularly the ones that have been around a while, a lot of them are just sitting tight. They're sitting still, particularly the older clients, and finding the younger folk are still like, yeah, let's get out there and hustle and whatever. But a lot of the turnkey, lazy investors are sitting very, very tight. So there's a huge chunk of the market not buying anymore. So dropping buyer demand, and I'm sure that's the same across the whole country. So the lender's like, well, we need to lend the money. How do we lend the money? Well, we need to drop the rates. Can we drop the rates? Yeah, well, we looked at it. So I think rates are going to, mortgage rates are going to keep falling. I think the base rate is going to peak. It might hit 5%. It might not quite hit 5%. And what the analysts are all saying, that the experts, quote unquote, they reckon the long term sort of average be between 2 and 3%. So what we're really talking about is a peak and then dropping off to 2-3%. And mortgage lenders will obviously price their products accordingly. One thing I do think is really interesting is a lot of lenders are not doing 2-year fixes because they don't know how to price them. They're doing 5-year fixes and they're doing 2-year trackers. I've even seen 7 and 10-year fixes, but there's no 2-year fixes, which is actually, if I could choose, I'd be putting all my mortgages on 2-year fixes, but most lenders are not giving them. And
so at this moment in time, you guys are business partners. What do you go for? Do you go for the trackers or do you go for the fixes?
We had this very debate yesterday, actually.
But the issue is, right, so we've got a portfolio of 6 that settles next week. We're buying it on a bridging loan. We're going to punt 1 and we're going to refinance and keep 5. Because obviously we need to do a day 1 remortgage. So with a day 1 remortgage, there's basically only 4 lenders that do it in a limited company. There's a 5th who's making rumours about entering the scene. Then of those 4, you've got to then whittle down who would lend. So then you're restricted on those lenders. But if we were to go for the cheapest rate, if we say wait 6 months, which isn't part of our strategy, we've got other lenders we could look at. Now, of the lenders that we were looking at, I was like, well, fixed rates guarantee it, but it's 5 years. But then the tracker's like, well, but the tracker, you're taking a punt of where do you think the rates are going to go? The base rate's going to go. So it's very, very, very debatable. And as Stephen said, well, I've made this mistake in the past. I've fixed properties for 5 years. And then 2 years later, I've got it actually hit me the hardest in my personal name stuff. 4 or 5 years ago, I had to keep it all. Fixed it for 5 years. And then I was like, do you know what? Actually, I want rid of it all. I've now actually sold the last property in my personal name just this current tax year, and it's gone. But I had early repayment charges on a lot of them because they're in the middle of 5-year fixes. And so you obviously, my circumstances changed. And we could fix all these properties for 5 years and then have a really good opportunity to sell at a price. And we've got a massive early redemption charge. And because we fixed it for so long, we're paying way over what we should. So it's
okay. So to answer the question, is it tracker rates or fixed rates?
So yeah, that's the long answer. I think we haven't
Sam
decided.
Should be a fucking politician.
We haven't decided, but I'm leaning slightly towards trackers. I'm leaning towards trackers purely on the basis that it's a 2-year product, short-term product, and then we can refinance out when there's a bit more certainty. So I'm leaning towards trackers, but again, it's all down.
And I'm leaning towards a 5-year fixed.
It's all down to the individual, and let's just say you should seek independent professional advice from your mortgage
Absolutely.
broker. And there was no way, Stephen Clark, there was no way we were going to keep this episode to half an hour with Sam on. No chance.
Very true.
So much to say, so little time.
Exactly. Absolutely. Thanks for joining us anyway, Sam. I appreciate your insights to it as well, and it's good to have you back on.
No worries, anytime. Take care, guys.
Brilliant. Thanks, Sam. Okay, so I hope that brings you up to date with all the market news, guys. As always, we are back with our networking events this month. It's Wednesday, the 1st of February. Stephen?
Yes, we've got our networking events on in Edinburgh, Glasgow, Dundee and Aberdeen. Get yourself along to them. Tickets can be found on our website, the scottishpropertypodcast.com.
Great stuff, and speak to you again next week.
Thanks a lot, guys.